Minasan, konnichiwa, Zamurai Engineer desu. In this video, let us continue discussion about system design, activity-based costing. So we are currently on module 3.05. Let us proceed. In this module, we have learning goal to record the flow of cost in an activity-based costing. How can we do that? So let us take a look on that activity in this module. If you can prepare notes or just decide to rewatch or review this video later, you can choose to do so. Okay. Cost flow in an activity-based costing. For example, we have one example company here, survey company, which uses activity-based costing. The company has 5 cost pools shown below. What do we mean by cost pools? So we mean machine-related, purchase order, machine setup, product testing, and general factory activity. So cost pool meaning the type of activity, okay? Machine-related activity, purchase orders activity, machine setup activity, product testing activity, general factory activity, okay? So what are the measures? Again, to review, activity measures are like machine hours, number of orders, number of setup, number of tests, or direct labor hours. Okay? Those are example of activity cost pool and activity measure for survey company. Okay. So we have what? Estimated overhead cost for the next column. So the third column here. On the first line, we have what? $175,000. Second line, $63,000, and so on, up to the fifth one, $300,000. If you use your calculator and get the total, maybe you can confirm that the total is about or equal to $790,000. Okay. What is the next column? The expected activities for the month, for the quarter, for the year. In this case, I think this is for 1 year. Okay? I think this is for 1 year. So we have what? 5,000 machine hours for the first line. Okay. 700 orders. Okay. For the second one. Third one is 460 machine setup. And the fourth one, how many testing? Product testing is being done for those company who have quality control. They want their product to have certain acceptable quality before they will offer it for public consumption, for public use. Okay? So, before they will offer this into commercial establishment, they will what? Test their product. So, product testing. How many testing? 200 testing in this example. So the fifth one is 25,000 direct labor hours. Okay. So you'll notice again and again, you will notice that if we are talking of activity-based costing, there are different activity units of measure, activity measure, no? So machine hours, number of orders, they are different from one another. But in conventional one, there is only one activity measure for all. of the activity. That is one main difference. No? And for example, here, let us go to the next slide. Cost flow in an activity-based system. Activity rates are determined as follows. So, given the table in the previous slide, we have what? Divide the estimated overhead cost by the expected activity. Because we are what? We are planning for the future. We are using previous data. We are using historical data, but we are planning for the future. That is the job of a manager. That's why it is managerial accounting. We are supporting the managers in their what? Decision making. We are supporting them with correct information. Okay? Correct information meaning historical value, so that they can what? They can properly decide for the future of the company. Okay? So 175,000 for the first line. Divide by 5,000. If you use your calculator, you can confirm that the value is equal to activity rate of $35. Okay, that is activity rate. This is how we compute activity rate under the activity-based costing. We already know the conventional computation in our previous, for example, financial accounting. But for activity-based costing, this is how we compute the activity rate. So we have what? $35 per machine hours for the first line. For the second line, we have what? 63,000 divided by 700. That is equal to $90 per order. Okay. How about machine setup? How much per setup? 460. So 92,000 divided by 460. That is $200 per setup. Okay. Product testing, $160,000 divided by 200 test. Therefore, how much? The rate is $800 per test. And general factory, $300,000 divided by 25,000 direct labor cost. That is $12 per direct labor hours. Okay. And you will notice the highest value here that we computed is the product testing. That's why when we test the product, we do not test all of the product. We just test, for example, per 1,000, we only test 3 units. So we do not test all of the product. There are companies that test all of the product, and that is very expensive. That is costly because testing have the greatest amount, the highest amount of rate. As shown here, one company has $800, which is very high compared to other costs of overhead. Okay. So overhead is applied on the basis of actual activities during the year. So we have application of overhead cost. Okay. So we have what? The second column, we have activity rate, which is the which are the values we computed on the previous slide. No? So 35, 90, 200, 800, and 12. So if you can recall, the highest is under product testing, the port line, $800 per test. That is the port one. So that is activity rate for product testing. And the third column here is actual activity. Actual activity meaning we computed activity rate from the previous year or previous accounting cycle, and we are going to use this. If we are a manager, where are you going to predict what will happen this year, and after some time we will have what? An actual values, because forecast is different from the actual, no? So if we are planning, we are actually forecasting, no? But now you can measure the actual if the activities already happened. Okay? So for example, the activity already happened, and on the first line, for example, there are what? 4,600 machine hours for the whole year. So therefore, you can what? Multiply that total machine hours, which is 4,600, to the activity rate, which is $35. If you multiply that, please compute. Use your calculator. Use your calculator. The answer would be $161,000. For the second line, for example, you have an actual activity wherein there are 800 purchase orders happen on that year. And the next one is what? How many machine setup? 500 machine setup happen on that year. The fourth one is 160 tests. Imagine, there are only 160 tests for the whole year. There are so many products involved. Okay? There are so many products that we produced the whole year, but there are only 160 tests, 190 tests. So companies usually do not test all of the products. Okay? Not all. For example, 100 products, they will only test 3. Okay? So for 1,000 products, they will only test 3. But the level of quality will remain the same if the quantity of, if the testing protocol, if the testing policy is strict like in Japan. I have an experience of being a quality control in Japan. I worked for about 4 years, going to 5 years, almost 5 years. No? Quality control. Very strict quality. That's why the Japan product quality is very desirable. High quality products. Okay. So there are only a small number of tests, 190 tests in this example. The fifth one is 23,000 direct labor hours. So multiply by 12, you can arrive at $276,000. And then you total all of this, all of the values, total overhead applied. Applied meaning that is now actual, no? Actual, no? Okay, 761. If you use your calculator and total the 5 different activity cost. Okay. Cost flow in activity-based costing system. Selected transactions recorded by company. A, raw materials purchased on account. Okay. So let us think about this. Okay. These are the list of transactions being recorded by a particular company. Number 1, raw material purchased on account. So bookkeeping, this is a bookkeeping activity. So they recorded $915,000 for raw material purchase. The next one is letter B, raw material used in production, $900,000, meaning $810,000 direct and $90,000 indirect materials. Okay, so there are direct and indirect material. We know that direct materials are those materials that go directly to be used as the product material. No? While indirect material are those materials that are consumables in use. Those are materials used in other necessary supporting process. For example, wrapping paper. Wrapping paper is not a material of the product itself, but it is necessary in order to wrap the product. Wrapping the product is what? Protecting the product, avoiding damage. To protect product, to avoid damage, it is important to have wrapping material. But wrapping material is indirect material because this wrapping material is not a part in the assembly of product. For example, your product is what? Cell phone. Wrapping material is not a part of a cell phone, but wrapping material helps protect cell phone to be as new as possible until it transferred to the hands of the customer or the buyer. So the product, the cell phone, has to look like brand new as possible, no? Without which the product would look like second-hand and it will not be acceptable to the buyer. So, meaning wrapping papers are important, but it is not direct material. It is indirect. Number 3, factory labor cost, $370,000, meaning $95,000 direct and $275,000 indirect. Also, the labor cost have direct and indirect. If you can review, if you can recall, direct labor is the human movement, the human work that is for the purpose of producing cell phone. For example, the product is cell phone. The human activities that is producing cell phone. Assembling cell phone. Okay? Please turn off your sound.
Sir, ang +1. 2.
Please turn off your sound. Okay? So, let us return back in our discussion. So, for example, indirect labor is the type of labor like security guard. It is important. Without security guard, maybe there are thieves that will take all of the products. But security guard is not a direct labor because security guard will not produce cell phone. Okay, so that is indirect labor. Okay, also the cargo operator, the one who is transporting the products from one place to another. For example, warehousing. Those type of people works are important also, but they are indirect. Warehousing is not the type of work that will make cell phone. They are just properly storing the cell phone. Okay, they are important, but they are not direct. Okay, number 4, depreciation of factory assets. Okay? Given $180,000. Number 5, miscellaneous manufacturing overhead cost incurred on account, $230,000. Miscellaneous. So meaning to say, miscellaneous is a technical term. It's a technical term for accounting, which means others, no? Other cost, no? And number 6, manufacturing overhead applied. So this is the part wherein we computed, no? $761,000. And number 7, goods costing $1,650,000. So these are what? The bookkeeping, the recording of the transaction being made by the company. Okay. Okay. So cost flow following journal entries would be used to record transaction. In this example, A and B. Okay. So after you have those transactions recorded, we are now going to put it in journal. Okay. Recording transactions from scratch into a journal is actually called journaling. Okay? Okay? Journal reporting or journaling. Okay? So, we have to, what? For example, raw materials. That is 915. Okay? So, accounts payable. 915. You'll notice debit. Take note, debit is always in the left side. Credit is always in the right side. Debit, credit. Okay. Debit should always equal to credit. 915 for debit, 915 for credit. Okay. What do we mean by raw materials? Accounts payable, work in process, manufacturing overhead. These are the names of account names. They are account names. Or what we can say, record name. Name of the record. Okay? Account names. Okay? So the account name raw materials increased by 915. That's why it is debit. So our company has to pay that raw material later on. That's why it is credit. Okay? And letter B, work in process. Meaning the raw material is now being used in making the product. For example, what? What product? CD, DVD, cell phone. Okay? Work in process out of 915. Okay? Out of the raw materials in the stock room, in our stock area, 810 of those material are being processed. They are called work in process. They are not yet finished. Not yet. They are currently being worked on by the staff, by the engineers, by the technician, by the workers. Okay? And what? Manufacturing overhead, 90,000. Therefore, raw materials being used here in letter B is 900,000. Okay? So, that is transaction A and B. If you can look back, okay? You can look back A and B. You can look back A and B. Transaction A, raw material purchase on account. What do we mean by on account? Meaning loan. If we say on account, purchased on account, purchased without paying cash. Purchase on account, we can say purchase on cash. Oh, okay, that is cash. But purchase on account, That is loan. So we have to pay it later. That's why it is called what? Accounts payable. Letter A. Letter A. Look at letter A. So the transaction A and B is what? Okay. Please prepare your journal sheets and follow this. Write this up. Write this. Please write in your journal sheets. Okay. As a practice so that you can have practice. Okay. Letter A. Raw material purchase on account. Write in your journal sheet. Raw material. And then a debit 915. And then accounts payable, credit 915. So letter B, raw material used in production 900. Meaning 810 direct and 990 indirect. How to do it? Okay. Labor cost. Okay. So do it like this. Okay. Okay. Our labor cost is overhead. That is indirect. No, indirect. We are talking of materials being used, work in process, 810. And overhead, 90. That's why we utilize material of what? Amounting to $900,000. Okay? 900. So the third one, letter C. Let us go to letter C. Please take a screenshot. Please take a screenshot of this. What? Seven transaction. Please take a screenshot because so that we cannot go back and forth. So that I will minimize going back and forth for this example alone. Please take the screenshot and try to record this in your journal sheets. Okay. Okay. So let us go to letter C. So this is the letter C. Okay. Work in process. Okay. Okay, work in process 95,000. Manufacturing overhead 275,000. Debit. Because they increase. Because they increase the work in process, they increase manufacturing overhead. That's why it is debit. Salaries and wages payable, we have to pay it. So that is credit. Okay, what about the number 4? Number 4, manufacturing overhead, 180,000. So look at your screenshot. Look at your screenshot for letter number 4 or letter D. That is 180,000. Okay, now let us go to what? Number 5. So manufacturing overhead again, $230,000. But do not put dollars in journal. You only put dollars or peso in your transaction record. The first one, the first transaction record, the listing of transaction. But here in journal, do not put dollars. Also in ledger, do not put dollar sign. Okay, so this is number 5. If you can look back at number 6, so this is how you record this number 6 in the journal. This is the journal. Okay, so work in process again, debit, and manufacturing overhead, credit. Okay. And lastly, number 7, we have now a finished product, finished goods. How many cell phone did we produce? 1.65 million, amounting to 1.65 million cell phone was produced. Okay? Okay, finished goods. So meaning to say, the work in process, all of the work in process is now transferred to finished product. Okay? So there will come a time that all those products being manufactured will be finished, and that is called finished goods. Okay, so those are journaling. So that is the flow. Okay, okay. After journaling, we have ledger. Posting is the terminology we say when we are recording into a ledger. Recording to a ledger, that means posting. Or we can also use T accounts. Ledger is also similar to T accounts. So you will notice letter T in this. You can use your ledger sheets. I already talked about you preparing journal and ledger sheets. You can buy, but you can also prepare your own by using ball pen and ruler. Okay, so manufacturing overhead from the journal, all of the account names with manufacturing overhead, put it here. Okay, and just follow. For example, letter C. I will give one example. Letter C. Letter C is 275. This letter C is what? Is in the right side, meaning it is debit. Letter C is in the right side, debit 275. It is called manufacturing overhead. Okay, I will show you. Let us go back. Let us go back. Let us go back to letter C. There. Letter C. Manufacturing overhead. The second line. The second line, manufacturing overhead, 275. Meaning to say, all of the record that you will going to post in the ledger have to be coming from journal. So all the journal entries will be transferred to ledger for posting. Okay, so that is what I'm going to say now. So first is transaction record. Number 2, journal entries. Then number 3 is ledger posting. So we are now posting into ledger. Not only the manufacturing overhead, all of the account names have to be posted separately. Manufacturing overhead in the same place. Okay. Other, for example, accounts payable in one ledger. Manufacturing overhead in one ledger sheet. Okay. What else? Work in process, another ledger. Okay. So all of the account names. So there are several account names that we talk about. So what is the meaning of balance here? You have to compute total. You have to use your calculator. 90,000 plus, follow my lead. 90,000 plus 275,000 plus 180,000 plus 230,000. As you can see in the monitor, minus, okay, minus 761,000. Now, if the answer is positive, you have to write it on the right side. That's why it is written down on the right side. right side is debit. Okay? On the left side is credit. If the answer in your calculator is negative, do not write the symbol negative. Instead, write it on the right side. Write it on the right side because the right side is credit. Okay? So, if the answer is negative. If the answer is positive, write it on the left side. So, if you use your calculator, as I said, the answer would be positive and